Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is a Forex chart of DXY, and as per our expectation, there is not much move on the chart of DXY. DXY is still trying to recover, but due to the less volume, less volatility in the market is unable to do so. Though we have a falling wedge pattern, and falling wedge pattern is a trend reversal pattern, but still there is no sign of any trend reversal yet, because for a trend reversal we need volume, and the volume is missing in the market right now due to Christmas and New Year. Maybe after 31st December we will get some move in the market, we will get a trend reversal, but as of now DXY is not showing any sharp moves, so as a result it should remain within the wedge only. Okay, now let's have a look at a chart of gold. So this is the 4 hour chart of gold in front of us, and we can see that right now market is standing around the previous resistance level of 1825. In our previous videos we have discussed about the importance of 1825, because on the weekly chart, 1825 was acting as a very strong resistance. Market was trying to break 1825 for the last couple of weeks, but market was unable to do so. But this week market looks bullish. Okay, so as a result there is a possibility that market may try again to break the resistance. But first of all, we should focus on the upward channel. You can see that we have an upward channel on the chart of gold. So if market breaks 1825 level, okay, if market breaks 1825 level, then the next resistance will be around 18 around 1835, 1837. Okay, if possible, try to draw a trend line like me here at the top, at the bottom as well, so that you can get a better picture, so that you can analyze the market better. So if market breaks 1825 level, observe the market, because market has been trying to break 1825 for the last 2 weeks, market unable to do so. So if market breaks 1825, observe the market, what's the size of the gathering, so that you can get the idea about the volume of the market. Okay, so if you see the market is breaking 1825 with a big green candle, it means that market has volume. But on the other hand, if you see that market is breaking 1825 with small candles like this, okay, then it means that market does not have the required volume, and there is a possibility of a false breakout. So if market breaks 1825 with small green candles, then it's better not to take a buy position, because false breakout can be dangerous. And right now in this market situation, Christmas right after 2-3 days, so yes, volume will be very problematic. So as a result, if you see market breaking 1825 level with small candles, no need to buy, just observe the market, wait for 2 or 3 hours and just see how the market is doing. Because see, whenever there is a breakout, okay, try to listen to my argument here. So whenever there is a breakout but there is no volume, it's always better to wait for the market to retrace. Okay, so when market will try to retrace, you can go for a buy position. If you see the market is going for retracement, after retracing market is taking support and bouncing again, you get the confirmation that finally market is taking support, and you can go for a buy position. So let the market sustain above the resistance of 1825 for a couple of hours. If you see market is doing okay, go for a buy. On the other hand, if you see the market is breaking 1825 level with a big green candle, you can go for a small buy position immediately. Let's say your preferred lot size is 0.1. So what you can do is, just to save yourself, and if you want to save yourself and also not to miss any opportunity, because sometimes when we wait for retracement level we miss the opportunity as well, isn't it? So what we can do is, if you see market breaking 1825 level with a big green candle, okay, you can instead of directly going for 0.1, you can go for 0.03 or 0.04. If you see that okay, the candle is doing okay, good, then you can again enter Again, you can enter in the market by 0.05 or 0.06. Means that instead of taking a buy position with all the quantity, okay, just to save yourself, you can reduce the lot size in the entry, and when you'll see after some time that okay, market is doing good, the breakout is real, then you can enter again. That is also one more strategy that you can follow. But overall, the market is in uptrend right now. The market is in upward channel. So 1835, 1837 is the next target if market breaks 1825 level right now. And as of now, as market is standing in down the 1825 level, but still we can see no signs of coming down. So it's better not to take any sell position, because try to understand the market emotion here. As long as market is standing like this, it means that buyers in the market do not want to come down. Try to understand the market emotion here. Okay. So during the European session or US session, if you see market coming down, then what you can do is you can simply switch to the 1 hour time frame. You can see right now I'm in a 1 hour time frame, and I'll be drawing my favorite Fibonacci retracement here. So our Fibonacci is back, and the best part is this drawing of Fibonacci will work nicely. How do we get the confirmation? We get the confirmation because when market made this high here, market respected this Fibonacci level here. So during the European session, US session, if market starts coming down, observe the volatility. If the size of the candles are like this, if you see that there is less volume in the market, okay, market, try to understand the body language of the market. If you see that the body language of market says the market is not in a mood of going down, then you can easily hope the market will take support again around 1812 level again. And if you see market taking support again around 1812 level, you can go for a buy position. But yes, see, this is the Fibonacci 23.6% retracement level. This is not a very strong one, so as a result you need to be careful. If market bounces, then only take a buy position, because already market is taken support once. And in case market breaks it, okay, in case market breaks it, your next support level will be 1805 level. Why 1805 level? We can clearly see because of Fibonacci 38.2% retracement level, and the third support will be around 17, sorry, this is 19. So the third support will be around 1798 to 1799. This is the third support on the chart of gold because of Fibonacci 50% retracement level. And apart from Fibonacci 50% retracement level, we can also see previous price rejection around this level. If you are fond of using Fibonacci, then you must know it very well that Fibonacci 50% retracement level and Fibonacci 61.8% retracement has a special position in the market. They are much stronger in comparison to 23.8 and 38.2. Okay, so this is it. Hopefully you've understood where you can buy and sell. Right now, though market is standing in a resistance zone, but we can easily see market is not in a mood of coming down. So try to avoid, observe the market and try to take positions, okay, at the levels only. This market is slow right now, and market will be slower by tomorrow and day after tomorrow. So please follow proper risk management. Taking a trade during breakouts can be a little bit risky, not in case of gold, in any pair. So please be careful. Do not gamble with your hard-earned money. Bye bye. Take care. This is my analysis. I can be wrong as well. So do not blindly trade. Okay. Bye bye. Take care.